and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Going well. How are you today, Will?
Doing all right myself. Moving everything into a new office here at Ohio State for hopefully my last semester, as long as I don't screw anything up here in my master's program. Thus, again, the different background. Hopefully next week we have the actual Brownfield banner once again. But Ben, you're also hopping locations these days. Trying to dodge some spotty weather over there in central Missouri.
Well, yeah, so it snowed here in Columbia. Not a big snow, a pretty wet snow. It melted a lot, but I just chose to work from home today to kind of avoid some weather. We'll see. I might get out and about here after a bit.
Avoid the weather, stay cozy,
That's right.
all that
Yep.
good stuff. So, talking about avoiding some downfalls overall in the week, we had some slight losses and some a little bit of eventfulness, especially in those wheat contracts. But a quick rundown here for March 24 corn down 8 cents at 4.55. March 24 soybeans down 28 cents at 12.45. The soybean oil contract for March up 0.48 cents at 47.81 cents. Soybean meal by the short ton for March was down $11 per short ton at 368.50. The March wheat crop for 2024 down 10 cents at 596. And then that March crude oil contract up 20 cents a barrel at 71.09. So Ben, what are your initial thoughts as we're really looking at the first full week of the new year?
Sure. So I think probably the biggest story here is on the soybean side. Some just weak overall demand in the soybean complex. We kind of anticipated this a little bit as we turned the year. The US's export window really got shrunk this year due to large South American exports. And we just continue to see disappointing export numbers for soybeans. I think it's that soybean number that's kind of bringing the whole complex down. And I really don't see a whole lot of correction between now until we get to that prospective plantings report there at the end of March for U.S. acreage and grain stocks, at least on the soybean side. There's still some opportunities on the corn side, but I think this is kind of a trend we'll see for a while in soybeans.
So Ben, I think today's kind of a fun episode. We get to do some wheat discussion because we had the state storage report for wheat showing some conditions out there. And really taking a glance at the numbers, we saw some drop in condition ratings in the western part of the Midwest, and then some upticks in states like Missouri and Ohio, maybe a little bit further east for those wheat producing states. So what's your take on where that leaves the market currently, and what's the next step forward?
Yeah, so we don't get a whole lot of information about the winter wheat crop this time of year. It's dormant, so it's one of those things that sporadic updates from time to time are important. Um, we're in a better spot now for the U.S. winter wheat crop than what we were a year ago. Whether this spring is going to determine a lot of this, but I think overall, the snow that we've seen in western Kansas and Colorado here the last couple of days, I think certainly is going to be helpful on protecting this wheat crop from low temperatures. The moisture continues to be there, and then as you mentioned, as we look to the eastern part of the Corn Belt. Some very favorable wheat conditions. Missouri, for instance, 73% of the winter wheat crop here in Missouri rated good to excellent. That's up from 44% last year. Ohio had a record wheat crop this year in 2023, or last year in 2023. Their winter wheat conditions right now are at 71% compared to 49% a year ago. So what does this mean for the markets? Probably doesn't tell us a whole lot about yields right now, but what it could mean is it could mean that people retain their wheat acres when we get around to the spring.
Well, and Ben, looking at retaining that acreage, that kind of leads into some reports that might be so influential to the market coming up this week. So looking at maybe how acreage might play out, what is your expectation as we see how wheat fits into that picture?
Yeah, so the only ones we're going to get here this week are those small grains. So winter wheat and winter canola. Or small grains. We'll get the wheat, we'll get those seeding reports. My expectation is that we see a pullback in winter wheat seedings from a year ago. the market conditions just weren't the same as what we saw last year. I think we have a couple areas of the Corn Belt that, it was really dry at wheat planting. People didn't want to take the risk of putting wheat out there. So I do expect to see lower wheat acreage. To the extent of how low, that's a good question because wheat tends to be one of those crops that gets large revisions. As a reminder, Missouri last year was pegged at nearly 600,000 acre, 660,000 acres. We finished closer to 800,000 acres by the time it was all said and done. So large revisions in that, but at least a good starting point to work from.
Well, Ben, you talked about the conditions last year and the dryness, and for the most part through this winter season, we've seen a lot of dryness throughout the Midwest. Maybe that starts to shift now. We're seeing snow in the western part of the Corn Belt, and then it's been raining quite a bit here in the eastern part of the Corn Belt for the last day and a half or so. So looking at that, do you start to see maybe a little bit of a recharge into expectations as we transition slowly toward the spring area when it looks at moisture?
Well, I think certainly this moisture is welcomed for large portions of the Midwest. Here in Missouri, we've got this snowfall. I don't see a lot of it incorporating into the ground. I'm sure it is. I'm not a soil expert, but some of it is. However, I think a lot of it is running off into ponds and streams. We need the moisture for ponds for cattle, so that's going to be a positive. It's expected to be a rather active January from a weather standpoint in certain parts of the Corn Belt. That's good news considering that the drought is expected to grow in places like Indiana and Ohio over the next few weeks. So this is positive as we maybe start to head into a dry period here.
Well, and while we've seen some moisture return a little bit into the Midwest, we've also seen a lot of moisture in that Argentina area looking down to South America, and that's really done a number in pushing down commodity prices here in the US, looking at maybe helping out production down there. So as we're now, moving through January, how do you expect the market to continue to watch that in South America? How much more room does the market have to, I guess, get kind of pushed down as we continue watching moisture levels?
Yeah, this is another good question because we've largely been following weather patterns and dryness or extreme rainfall in regions as an indication of crop development. We're probably past that stage now outside of Brazil's second crop corn. At this point it'll be about harvest progress. If it continues to rain, that'll slow harvest progress down. Argentina's maybe got a little bit more of a running room just given that their climate tends to be a little bit warmer than Brazil's given their geographical location. And so as we look at December weather for Argentina, it's the wettest December since 2009, 33% higher rainfall than average. And then just give you an idea of how that's playing out into crop conditions. Argentina's soybeans were 3% terrible this year. I'm going to call that bad and very bad, right? That's the terrible category. That compares to 30% terrible last year. So a big improvement in that crop. And as a result, the expectation is that Argentina's soybean crop is going to be up to 20 million metric tons, enough to make up for any shortfall that we see in Brazil.
Well, and that's one of the things too, where you're looking at South America as that potential giant every year when it comes to production. It is scary when you see the rainfall so above where it was the last couple of years, especially when you look at that condition rating. So where do you see Argentina moving forward and South America as a whole when it comes into the global market? How are our trading partners, key partners like China, looking at that and thinking about how they want to spend their money?
Yeah, so I think Argentina will be a player in that. It's yet to be determined exactly what Argentina's path is given their government and kind of some major changes happening there. We will see an improved Argentina picture this year compared to what we've been seeing. La Nina was very rough on that area in terms of a weather pattern, extreme drought, just very poor conditions. I think I haven't heard anybody talk about, even average or below average production for Argentina. The picture has been relatively positive, given this year. Conversely, on the Brazilian side, we probably are seeing a little bit of a deterioration in expectations for the Brazilian crop. No longer talking about a record soybean production number. Last week, the USDA's post down there came out with a soybean production estimate of 158.5 million metric tons. That is below where USDA WASDE is currently. There's some private estimates even further, in the low 150s. We'll see how this develops. I think some of this is going to be very similar to what we experienced in the U.S. last year, to where there's parts of the country that are extremely good and other parts that aren't very good at all. And so how those two balance each other out is going to be the game. And that's going to be the question as we look ahead for the Brazilian soybean crop. I think for Brazil, if I can stick with that for just a second, I think the big thing for Brazil is, the timing of this corn crop, the weather that we've seen, the weather pattern that we've seen here over the last couple of weeks, delaying soybean harvest, delaying that second crop corn planting. That could be the story that materializes that gives corn and the whole complex a little bit of a bullish rally here over the next couple of weeks. But absent of that, there's really nothing too much to really get excited about. So my expectation right now is that we continue to trend a little bit softer until we get those USDA acreage reports or those US acreage reports, but certainly a possibility if we continue to see delayed soybean harvest.
Well, Ben, as you tease some of those USDA reports that are going to be coming down the road eventually, what should farmers and ranchers be paying attention to this week as they look at what could move the market?
Well, that's an interesting week. We've got a lot of stuff coming up, a lot of annual reports kind of summarizing the past year. I don't expect any surprises in the 2023 production report, annual production report. This is generally considered the final report. However, USDA has multiple opportunities to adjust that in the year ahead. So we'll get a picture there. The one thing that I will note, and we've talked about this before, is this is USDA's opportunity to adjust that relationship between harvested acres and planted acres. Up until this point, it kind of moves in the same wedge or allotment, if you will. I do think we'll see a larger gap between planted and harvested acres for things like corn and sorghum, given the amount of silage that we've seen and just kind of abandoned acres at different parts. The same could be true for soybeans, given some of the challenges we've seen there. So that's my big surprise on the annual report. We also look at USDA's report. The thing I'm going to be looking for is how aggressive is USDA in cutting some of those Brazilian corn and soybean numbers in this report, and then does that trickle through anything? I don't really expect any changes in U.S. demand as a result of that, because again, Argentina has been able to fill some of that gap. And then just one final reminder, Monday is a holiday. It's Martin Luther King Day, so everything is delayed next week. By the time we meet again next week, we will have all those reports to talk about, plus the National Oilseed Processors comes out with their December crush report on January 16th.
All right, so quite a bit, honestly, for people to digest and try and see how everything plays out. Ben, it's always a pleasure having you and your knowledge on the program. If viewers and listeners would like to learn more about us, what we do, or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.